have management joining us now. Aditya, I request you to even listen into that conversation and then perhaps give us your views. Let's connect with Keki Mistry, who's the Vice Chairman and Chief Executive Officer at HDFC, to know his views on the hawkish comments from the Fed Chair and the overall business outlook. Mr. Mistry, good morning. The first question is, could this tightening in the US impact our economy as well? Do you see the RBI continuing with rate hikes, and if yes, till when?
I don't think tightening in the US will have an impact on our economy directly. Indirectly, there might be some impact in terms of stock markets and valuations and currency and so on and so forth. Because whenever there is, historically, we've seen that whenever there is some event that happens in the US, like interest rates going up or, many years ago, US getting downgraded, whenever an event like that happens, money for some reason flows back to the US. So when equity money in particular flows back to the US, you could see a little bit of impact on the stock market, but not as much impact on India as you would see in other countries. Because our domestic market is so strong, we have seen so much of domestic investment coming into the equity markets that even though foreigners have withdrawn at one point of time nearly $36 billion, markets had not fallen that much. So Indian markets are far more resilient, and the economy per se, I don't see the economy getting impacted in any material kind of a manner. Interest rates, will RBI raise rates, not raise rates? To my mind, I would still expect that there could be between a 25 and a 30, maybe at max a 35 basis points hike in rates in the next credit policy.
Mr. Mistry, hi, good morning. India's housing sector is looking up, right? And this is happening unlike what we're seeing in the US and China, where there are sharp slowdowns which are taking place. Can we expect demand here to continue to be pretty strong despite some of these global uncertainties and them weighing down here and showing up in India as well, in the form of higher rates and other things?
Well, first of all, I don't buy this theory of economic uncertainty. I think the economy is on extremely strong footing. I genuinely believe that. I genuinely see that in the economy. I talk to friends in different industries, and the optimism level that I've seen today is far higher than I've seen at almost any other time in the past. We have completely come out of COVID, so the economy stands on strong footing. That's number one. Number two, you talked of interest rates. See, we must understand that a housing loan is a long-term loan. Initially, the original term of a loan could go up to 14 or 15 years, and the average term is typically 12 or 13 years, or that sort of vicinity. So in that period of 12 or 13 years, interest rates will go up and interest rates will come down. You can never have a steady interest rate environment. All loans offered today are by and large floating rate loans with maybe a fixed tenor for a fixed term, fixed interest rate for 1 or 2 years. But otherwise, it's all floating rate. So when you are taking a 12-year or a 13-year loan, it really does not make so much difference where the interest rates are at the time when you take a loan. Because if rates are low, they will go higher over a period of time. If rates are high, they will go lower over a period of time. So it does not have that much impact on housing loans. Interest has a bigger impact on shorter term loan products like a personal loan or a car loan or a consumer loan, where someone is taking a loan for say 1 year, 2 years, that type of thing. Because then if it's only a 1 year loan or a 2 year loan, it's very important that you borrow at a time when interest rates are low. So the momentum is strong, it continues to remain strong, and I remain extremely optimistic that the growth trajectory we have seen over the last couple of years will sustain for a very, very long time.
Okay, that point is taken, Mr. Mistry. Good morning. But do you expect the fundraising to get more challenging or getting pricey going forward?
I think fundraising is going to follow interest rates in the economy. So if interest rates in the economy rise, then obviously to that extent, the cost of raising money will also go up. But at the end of the day, all banks, all the bigger banks and we, for example, always carry a match balance sheet. So if funding cost goes up, then automatically the lending rate also goes up. So in a way, the spreads are always protected. And I mean, as I mentioned earlier, in my opinion, RBI would look at probably a 25 to a 30, maybe a 35 basis points hike in rate in the next policy in September. But all this is so data dependent. We are still, 1.5 months or at least a month away from the credit policy. So in that period of 1 month, so many events are there. There will be the Fed policy, there'll be inflation data, there'll be so many other indicators which would give a better sense of where inflation is and where the current account situation is, to help, to sort of help RBI take the decision on whether to raise rates, and if so, by how much.
Okay. The spreads were significantly under pressure in Q1. How do your spreads normalize in the coming quarters?
So we had explained very clearly after the results why you saw that the net interest income or the net interest margin was slightly lower. Net interest margin was within the band in which it historically has been. In fact, it was a little higher than the earlier band. It's just that the previous year, the first quarter of last year, which is April, May, June of 2021, the net interest margin had been extremely high for certain events which had happened at that time, which I explained after the results. Now, I'd also explained that another reason for the net interest income growth to be slightly lower than the normal growth that we see is because of the fact that whilst on the asset side, the loans that we give to individual customers, the repricing of the loan happens every 3 months. So if someone has taken a loan, let's say in the month of January, then his loan would get repriced in January, April, July, October, and January. If someone has taken a loan in February, it will be 3 months from February. Whereas on the borrowing side, that rate change is immediate. So when rates go up, temporarily you see for a month or so that the benefit, the higher lending rates or the increase on the asset side will come over a period of 3 months. So there's typically a 1 month lag between the time the interest rates are adjusted and the customer starts paying the higher rate on individual loans. On non-individual loans, the effect is like any other, it's immediate.
Mr. Mistry, what's your view on the corporate book? When can we see a pickup in the corporate book? And also, when do you see, how do you see wholesale real estate loan demand this year in FY23? It's been muted in the recent past.
So the reason why you see that the non-individual loan book growth has been lower than earlier years primarily results out of the fact that between 2017 and 2020, the real estate sector, particularly in the metros, was under a little bit of pressure. We all know that. After 2020, the demand has picked up significantly. Markets have been growing very rapidly, and so on and so forth. Now, between 2017 and 2020, launch of new projects had slowed down significantly. And a construction finance project, unlike, let's say, a corporate loan or a lease rental discounting loan, in a corporate loan or an LRD loan, the disbursement is made immediately. So if you give a loan of, let's say, argument's sake, 100 crores to a customer, that 100 crores can get disbursed very, very quickly. Whereas in a construction finance loan, the disbursement is spread over a period of construction. So the builder puts in his equity first, and then the disbursements start. So the pickup, so whilst the demand has started picking up in the last couple of years, by the time it starts getting reflected in a big way in the loan book, it will still take a couple of quarters. Because as I said, the disbursement is spread over the construction period. The construction period can sometimes go for 3 years, 4 years. So it's spread over that period of time.
Okay, Mr. Mistry, thanks a lot for joining us. Good talking to you as always.